Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So it is Thursday, and it's been a pretty long week. You had start of the week where the market was probing for lows to test the August 24th low, and then put in an area very close. I think 3 handles we got close to their buy, and then had a bit of a squeeze yesterday for the end of the quarter. And then this morning you woke up, futures were up 15. By the time you sat at your desk and the market was open at around 9:30, was up 3, and then Dow went down 200 points before recovering. So lots of range type trading and lots of ways to lose money if you're on the wrong side of it. If you started buying the market too early, in the first half hour, you probably got stopped out. Same way if maybe you started to short a rally thinking that we would bounce back and roll down, you could have gotten a little beat up. So I guess the moral of the story is, pick your prices carefully and don't be stubborn either way. And if you look at the big picture, though, you look at the chart of the spiders, I guess there are a few positive things and there are a few things that definitely need to still, be proven. As far as where we are now, okay, you have a basic double bottom here, okay, versus the August 24 lows. I know the spiders did not get down there, but if you take a quick look at the SPX cash, it did. Maybe I don't know why that is. They usually correspond pretty together. But bottom line is you have this little double bottom here. Okay, it stopped right in front of it. It went as low as 1871. That low here was 1867. We did create this W. Okay, where here's your double bottom W. So now the question is, what kind of move can it have? Off the W. Is it feeble? Is it strong? And as of today, at one point it looked like it was going to be very feeble, and then it came back at the end of the day and probably squeezed a few shorts. So with that being said, what's the next real area of resistance? I would say right around here. Last time we had a big topping tail was when the Fed didn't raise rates, and that happened right there. And now it seems like if you want to draw this into a range, which makes a little sense to do. So let me expand this. I'm sorry. Go like this. Delete this. Okay. Now, basically, if you want to turn this into just one big channel without, without the topping tail that was your sell signal, we're still in the bottom end of it. So we're not quite overbought, but we're not really oversold anymore. So now we'll see if any real buyers, take this back up. So here is your next spot of resistance, which would probably be around the halfway mark, right? You go like this, it's halfway in the channel. So the longer it stays below this, the more control maybe some of the bears have to get it back there. But if we get up here and they don't sell it down, we might even pop up into this area. So it's hard to tell what's going to be next, except for taking trades and trying to identify the action. At this point, you go back to the spiders, and I guess you could say if you sold pre-market, which I was selling my spiders pre-market at 192.75. You might have another chance to do it tomorrow. You did get your red dog reversal right here, okay? And if you said I'm buying there with the stop at the low, you didn't even look at the action today. You're still long. And here was your higher low versus yesterday's low. And now you'll see, does it come back up and test the 21-day? The 21-day has been pretty much in control besides this push through here. So if you're just shorting, thinking that it's going to make new lows, think about what happened to the people who started shorting on this wedge right here. They probably got squeezed out into the topping tail. So tomorrow you have the jobs number, and we'll see what's next. We'll see if we open down, get this as support. If we open up, there's your resistance, and that's about that. In All Access yesterday, I said I think you could probably buy the bios, and I think the IBB's around 298. We'll get through 304, 305, and you'll get 313. Put a stop in at 290. And some are probably still long that, but then if you overtraded it or you bought too much at a high and misguided around it like I did, you probably don't have any. And I did lose. I did not do well trading this from the lower level. But anyway, this came in within 1 point of a double bottom. It kind of poked its head right up into the close. Those who bought on this day did not get stopped out. We were talking about the stop being actually, right here. Okay, you're still above this prior low, and I think you got your trade to here, and that's your tradable bounce. And then if they really want to squeeze the envelope, who knows? Maybe they could even get it this high. So the strength from the IBBs came from Celgene. Today, Celgene, if you look at lower pivots, and if you want to get a leading indicator, this actually broke above it 2 days ago and then give you some follow through, and now it's on its way up to here. So this gave you some clues that the bios are going to hang in there. I've been kind of watching this VRX, and I'm hoping we get, the same similar trade maybe here through this 180 tomorrow. If it opens up here at this level, I guess goes with the territory. If it opens down a little bit, there's a big seller at 180. If he lifts, maybe there's a trade there. But this is something to watch the past session or so, and could continue. And again, if you got out on this outside day here, or got out up here when these bars engulf these ranges, you get the luxury of trying down in here. But just for trades, it's still very, very broken. As far as tech, I came in long Fit, Netflix, and Facebook today, and let's see what they did today. Netflix was probably the strongest name on the block. It at first, gave you a decent, tradable move in the morning up $1, and then, you could get out of it. I actually got out of it, and then you could have went back to it when it showed relative strength, went green, and closed strong. If you had to be long something overnight, this is probably a good one. Unfortunately, I am not long it overnight, but if you are, it's something probably that makes the most sense as it's perking up first. Okay. As far as Fit, I think also some guys on the VTF took this home long, and if you did, I think it's a good candidate as well. High or low. This perked up yesterday, closed above the prior high, has some room up to here. So if you're in Fit, that too, good candidate. Another, because these were what we were all talking about on the VTF. Typically around 3:30 to 4 o'clock, we talk on the VTF about who's taking what long, who's taking what short. VTF's a product that has about 300 or so people talking during the course of the day, giving ideas, looking at things, talking about relative strength, relative weakness. On the VTF, you get to see my positions, positions that initiate from my Redler All Access note. I sometimes have 25 ideas on my Redler All Access note. I might get in 3 or 4 of them, and then they could see it when I do it on the VTF. And sometimes, if I have the time, I tweet it. Other times, I don't. It depends on how things are moving around. And then in the note, you can see my disclosure at the bottom. But anyway, if you look at this stock, Fit looks okay in the game. Not awesome, but in the game. Facebook too closed pretty strong. I think some guys took this. If you were playing an oversold bounce, okay, you got your you got a big portion of it. If you're playing for more, it gets a little riskier. Here was your, sell signal right there, 3 days down, and if you got in yesterday and held through, it triggered above this 2-day pivot, and now it's coming into some major resistance. So I'd be a little careful. If you took some home overnight, you have some more room. If you're looking to be short and you started in here, you started maybe a little early because this is more the rubber match spot. Google, I really didn't look at too much today. Probably looks the same. Yeah, same thing. These all look the same. You don't have to be in all of them. You had an engulfing day to get you out, came in to support, held. You could have bought into support, 3 days up, and now it's getting a little bit testy here. Who knows if it's going to break through and go or get resistance, and that's probably what's going to happen. Apple was very interesting. Apple, a lot of people say, Apple's irrelevant these days. Apple, you don't need to trade it. But Apple really has dictated a lot of the action this year. Apple was in that frustrating range for about 7 months, and so was the S&P, and so was the NASDAQ. And then Apple broke below its range before the S&P did, giving you clues. And then, there's been a lot of other trades where it's been a little bit of a leading indicator. When that flash crash low, it went green, and then I would say the market went green. And then I would say 2 or 3 days before the Fed met to see whether they would raise rates, it perked up first, and that's what triggered the wedge to the upside. And then the day before the Fed met, started showing weakness, telling you that there might be a failure. It's not that strong. But anyway, today, it broke. The last short trade really was below this 112 and change. Okay, after failing right here into this wedge, it broke above and failed. That was your sell signal after it was acting pretty well for a decent amount of time. Then broke the wedge to the downside, gave you a follow through there, and then today, it pushed below. You could have had a good trade to the short side, and then around lunchtime, it diverged. I tweeted saying, it isn't it cute that the spiders are making lows and Apple turned up, and I could have given you a warning sign that it got relative strength back. Don't be shorted. Maybe the market could rally, and then it closed okay. So now we'll see if it wants to rally maybe back up to here or so for a trade. But a little red dog reversal into this spot. I did not take it long. I did play along a little bit in the afternoon to help me make some money, but I didn't take it. I didn't take anything. I was going to take 4 or 5 longs, and I decide not to enter the jobs number, and if I don't know, I did that was just I guess it was a little not say spur. What would be a good word? It was just the decision I chose. I wasn't going to take one or two. If I was going to do it, I was going to take the 5, 6 names that looked good, and or not. I'm not short into the number, but I'm flat because I figure if we open up into resistance, I'll try and short. If we open down, I'll get some of these strong names to go from red to green and push. But I'm not so convinced that we could be in portfolio approach for more than a few sessions, let alone a day and a half, which is what's been really going on. So anyway, go back to the chart of Apple. Little red dog reversal here, which could get you moved back to the moving averages for a trade. To show you the divergence that I saw, let's go to the 5-minute chart real quick. First things first, Apple broke down, here. You had your gap down, pushed below this area, didn't give you much downside follow through, and then look where it was. Just say, okay, look at this level here. This is the low of the morning, okay, pushed up, and then this is, let's see, what is this? 108. 108 between 12 o'clock and 2 o'clock. It held above that, what's it called? That low. So if you go to the spiders now to see what it did. The spiders, let's see, the spiders made, let's go to the open, where this was your open, this was the sell-off. This is when it lost a 21-day, a little wedge to the downside. The low was, actually the spiders made, actually right here is where it made a new low, and then it went back pretty much within, I don't know, 20 cents of the low. So this was, what time was this? This was close to 12 o'clock. So at 12 o'clock it was on its way down to the low. And I know at 12 o'clock, right around here, Apple was not near the low. Okay, so 12 o'clock is when the spiders went to the lows. Apple did not, and Apple is the weakest thing to start. That's what brought futures down, and then it held in there, and then gave you a trending move into the close. So there was some minor divergence before you had your double bottom. I think I started to get long it right here for a trade, and I didn't take it home. So you'll see what's next, tomorrow with that. But overall, on the daily, it's giving us some clues of what could be next. And you did get a little bit of a bounce. And this also still didn't get back down to these August lows like most other names did. And as far as the banks, not much to talk about. Goldman was a little stronger than other ones, but you have a boatload of resistance. We'll see what happens if it's a strong jobs report. Maybe it gets back up to this area. JP Morgan's been a little bit better than Goldman. But 3 up days into a jobs number, I wouldn't be taking that home long, even if it could go a little bit higher. Oil started strong and gave you a little bit of a reversal. Just these algos are really good. When you think they're going to go down, they don't go down, and then they go down when you think they're going to go up. But anyway, this was your first potent move to the upside. Here was, how it held when everyone was downgrading oil. And then today, when the market looked like it was coming in, oil was strong. Then all of a sudden, oil failed, and now you have a bit of a reversal bar, or not say a breakout failure, but anytime that happens, you want to reduce, and then you want to make sure that this doesn't break. Because if this breaks, this could be a distribution type bar for more downside. XLE also, which still is in a broken trend, came into the 21-day, and the 21-day, which it's been below since May, still controls the trend of this. And until that changes with authority, it's just trades or shorts. And just to show you again, when this broke the 200-day, just to show you how weak things can get. First of all, my side, usually I get out when the 8 and 21-day breaks, and look at that head and shoulders top pattern, left shoulder, head, right shoulder. Look what happened when it broke the 200-day. So if you would have gotten out of the oil sector and oil names and et cetera, you could have got out at 92. You could have been, oh my goodness, it's going to hurt to get out here. Hurts a lot more well below. And anything that stays below the 200, the institutions do not want. If you go to oil and look at the same thing, look how oil has been below the 200-day since 36. It's at 14. So anyway, that's just lesson on moving averages. People say moving averages are useless. I say that's crap. I think if you're above the 8 and 21-day in a trending market, you could be in 5, 6, 7 long trades. Swing trades, trade around them. They get tight, you add tiers. They expand, you sell them, you hold some, you trade around them, maybe with a hedge. But when you're below the 8 and 21-day, risk off, do some trades, maybe look for some shorts. And if you're below the 200-day, you better have a lot of risk off and continue to look for more shorts and longs, and just use that H cell setup with the Bible red dog reversal into key oversold areas, like when the oscillator is minus 40 or 50 or 60, so you can get something more than just a day. Sometimes you can get 3. And then the 1, 2, 3, 4-day rule comes into effect. So those are all the different rules and all the different mechanics while you're in a market that's trying to figure itself out. So instead of having opinions, instead of putting yourself at crazy risk, create cash flow, take trades. Every now and then you could swing the bat a little harder when you have a great setup. Lately there hasn't been so many great setups, so you have to be more patient, be better with your prices, and be definitely in control of your share size, and don't overtrade, because you could have overtraded many times in the past few days and then missed out on the move you were looking to get. And at this point, I have no estimate or guess on what the job number is going to be tomorrow. John Credelli from the Post. I do read the New York Post for sports and for Page 6. I do look at his column because he's pretty good. He thinks that the number is going to be very soft tomorrow because of the no guesstimates, in the seasonality in September and October. So if that's the case, we'll see what the market likes. A weaker than expected jobs number, puts the Fed, I guess, further out, even though it's not that emphasis anymore. But whatever. I'm just blabbing right now. I will see you tomorrow morning. I'll be trading out of short hills. I'll be in the VTF, and at 4:30 my webinar starts for Redler All Access. If you don't have my note, you should get it. It's probably one of the, I think, one of the cost-efficient. Well, they're all cost-efficient, but it's a very low barrier to entry product. I think it's $300 for the year, which is like $19 a week or something. I don't have the math in front of me, which to me, for 2 hours of my morning time that I put every day to get it as real time and as current as possible, I think it's something that could be good for you. It's my game plan on paper that sometimes matches up to my morning call video. So good preparation for those who, want more resources. And with all that said, have a good night.